If it's Friday, it is the About Mansfield Consumer Advice Series. Hello, I'm Steve Casillo. I'm your host, and today we are talking about you because you're a consumer. And specifically, we're talking about your money, your nest egg, your retirement, your 401k, your IRA. We're talking about you and your money. And over here, just over here, here in studio, just over my left shoulder, Phillip Washington Jr. is here, and we we practiced this a little bit before because I didn't click the start video. What's the good word today?
Good word is gumbo, because like I was saying before, I'm gonna find some today.
You're gonna find some
I'm
gumbo.
gonna find some. It's perfect weather. It's not too hot. And I just want some. I hadn't had some. I went to Houston and I got crawfish, did some charbroiled oysters. I didn't get any gumbo. So
It's crawfish season.
and it's crawfish season too.
Because I've seen some posts on Facebook that people have started having crawfish
Yeah,
boils.
and they're getting to the right size. Right, the price is. I haven't checked this week, but the price is kind of high. But I think it's finally coming down because they're more plentiful. So yeah, I'm about to start eating a lot more of that.
Supply and demand, just like business itself.
Exactly.
So let's get into it. The Feds raised the interest rate, albeit just a little bit, but the Feds raised the interest rate earlier this week. And how will the Fed's recent rate hike affect the markets?
So here's the cool thing about markets is they price in news ahead of time, and so December, well, to go even further back, October, the bond market started pricing in, money tightening for whatever reason. Probably got word of the Fed's plans, and then the Fed formally announced it around November, December that they were going to tighten. And then they followed through. So if you look back at the market's been volatile, trending down and up, but down for the year. So it priced in rate hikes. And if you saw the market on Wednesday, the market for the last 3 or 4 days has been amazing, right? After the rate hike, and some people are like, "Well, why did that happen?" Well, because it already priced in the rate hikes, scheduled, so the market just followed through, what they said they were going to do.
So they still kept doing business even though the rate went up.
Yep. Because again, it was already priced in. So markets react on expectations, right? They were trying to project into the future, but since the market had already in October, it was like, hey, we think money's going to get tightened for whatever reason. And then the Fed said in November, December, we're going to tighten up money.
Yeah.
And they just followed through. It was within the expectation of the market. So it didn't react off base, right? As a matter of fact, the market went up for some unknown reason, but my guess would be it wasn't as bad as it thought, right? And we'll talk about the follow-up, but the market also thinks that the Fed, probably won't be able to raise rates as much as it plans to raise rates in the future.
Well, that was my next question: is do you think the Fed will be able to do all of the rate hikes that they project?
No. So, so if the stock market is pricing in 6 to 12-month expectations ahead of time, the bond market is the longer term predictor pricing in growth and inflation. And the bond market has been saying consistently over and over and over again that global growth is slow. And what that basically means is inflation is not a problem. People think it's a problem, but it's just inflation was just the short-term reaction to them putting a bunch of money in the system. But it's not. To have sustained inflation, you have to have lots of global growth, and we don't. We don't have lots of global growth. And so you might have price spikes like in the 40s, right? But you didn't have sustained inflation like in the 70s, and that's different, right? And the parallels were you had the 1920 crash, which was same as '08 crash, followed by a couple of decades of slow global growth. Same thing. You had the 40s, where we also had World War too, right?
Yeah.
You had some price spikes that came from spending, right? Similar parallel happening. But same thing, rates in the 40s were low because global growth is relatively low. Same thing.
So it helps to be kind of a history buff when it comes to because what comes around goes around. Is that
Absolutely. I think as humans we tend to our arrogance makes us think that you know this is unique. This never happens, but like the same things happen over and over and over again, and we organize around the same ideas. They just manifest differently based on the belief of the dominant belief of the generation that has a dominant belief. But the same things happen over and over again. Like
yeah.
it just keeps doing it.
All right. I'm a long-term investor. I'm sure there are plenty of long-term investors out there that are watching, that are listening. What should the long-term investor do with this information?
Assuming that you already have a well-built long-term portfolio of diversified investments that are built relative to your tolerance for risk, right? And what that means is if you're more tolerant with up and down movement, which is what the regulars call a risk. I don't believe it's called a risk, but volatility. If you're fine with that, then you put a big chunk of your portfolio in the future, right? If you're less tolerant with risk, then you may own some old school stuff plus some cash and bonds to not necessarily make money, but to balance out the volatility, right? So assuming you're diversified and you own all that in proportion to your tolerance for risk, you do nothing. You just leave it alone. You just ignore it. You enjoy life, right? You make money the effortless way, and leave all the stress and worry behind because like this stuff doesn't even matter in the long term.
Live your best life.
Live your best. What's it? Play like my shirt says. Play hard, say less.
That's investment advice as well as advice in general.
Absolutely, yeah. Don't overthink it.
If someone wanted to overthink and contact you, and how can they get a hold of Phillip Washington Jr.?
Best way is my website, stonehillwealthmanagement.com. You can book an appointment. You can email me. You can access our podcast on every major platform. That is the best place to go.
And you see the logo right there in the background. Wealth Building Made Simple is the podcast that Phillip Washington Jr. hosts 5 days a week, if not more. I don't know. You're doing it
at this point. At this point, I'm dropping 7 episodes a week. 7 episodes a week is what we're dropping. Not necessarily every day. I might get lazy and drop 3 on Friday, but 7 episodes a week.
Yeah, I've got 4 coming out today.
Nice.
Yeah.
Nice.
The king of the podcast right there is Phillip Washington Jr. Wealth Building Made Simple. Phillip, enjoy your gumbo, and let's do it again next week.
All right, we'll do. Thanks.